Hello and welcome, Alan Nuckman, Bullseye Options, with our latest edition of Where's My Head At? Today is April the 6th. The markets keep on marching. Not quite new highs, but a nice, healthy recovery and a big bounce. If you look at the S&P, we're back inside this long-standing channel that I've been talking about incessantly. And we'd have to extend things a little bit further, but between 2120 and 2040, we're back inside. Now, the question is the market going to push up above this 2080 level, which is the exact midpoint, which is a very important pivot. So we'll see if this 2040 holds us some support down below, which it has here in the last couple of sessions. So Monday, Tuesday, the market was down. Today, the market got back the losses exactly in S&P. So let's see if we can take out that 2075 level, which was from April 1st high, and then that 2080 level is critical. A move back up to 2120 and a full V recovery targets 2400. Believe it or not. Believe it or not, technically, but I can't say that that's not going to happen. If we look at what's happened over the last 5 years, every major sell-off has bounced back and made new highs. Bounced back, made new highs. Bounced back, made new highs. And you can see October 2014, then we had August of 2015, and then we had this January nonsense in 2016. So it is what it is. The market still is strong. Let's talk about what happened today specifically. DJI, the Dow Jones, let's just go straight to what drove the Dow was Pfizer. Pfizer profit taking for us today. We exited our position we've been in here for a little period of time, and you can see it traded sideways within this range, and then that break above 32 was that key midpoint resistance, and we use that to take profits here today. So let's dial down a little bit and go through the trading strategy from beginning to end, and let's look at the chart. Breakout day today, big burst to the upside, big 5% push up to that 33 level, and that was our near-term target. So we could look for more, but let's talk about what's happened in a very short period of time. We got our 50% profit, and that was a huge trade, considering the stock only had a very modest move. So let's look at where things were before we got into the trade. Trading between, what do we have here? 28 and 32 within this range. So our upside target was 32, the middle of this overall sideways action. So we were looking forward to get back up to 32. It was trading about, 29 or so when we put this position on. And we bought a June option. So now the June option still has some time, still about 2.5 months, but we've seen a very quick move, and we've met our objective. Originally, we purchased a deep in the money call option, the 25 call, bought that for about $5, and had some time, had a nice high delta of 87% to compensate for the fact that it was a near-term option instead of a January option or something with a lot of time. We got something that was deep in the money that was going to pay off very well. And here's what happened with the chart, and this is what it looked like today. Boom. We saw a move from $29 to whatever, $33. So a $4 move in the stock, which is, 10-15% move, but that's a 50% return on the option. That's the power of options. A deep in the money call acted like the stock, but had leverage and had limited risk. So that's a beautiful trade from February 22nd. So what does that work out to be? About 6 weeks. Very nice trade. We'll look to see if the other Dow components that we're working on right now can follow through. And we're seeing very much the same thing. We've got an Intel play. We've found two, blue chip stocks that were trading at the lower end of their ranges and bought some time. So if you look at Intel, we've got an in-the-money call there, and a push above 33 should really get this going in 35. We could get in solid position right now. I think right now, if we look at it, it's very profitable. It's a deep in-the-money call, but that option has plenty of time. That's a January option, so we have greater flexibility. Let me just find that here if we can. INTC trade alert. Bought the January 25 call for about $5 as well. So that option still has plenty of time, but it's the same premise here. If you look, the NASDAQ started to play catch up. We were looking at buying it on that support and seeing a push up to this 35 level and a bounce back. Now we've seen that. We've got plenty of time for good things to happen. The option for $5, the January 25 call, if we go look at that, plenty of time. That didn't have to balance as much of the strike versus the time. We could buy a deep in the money call. Again, that 25 call, the January option still has what, 10 months left to go, and that 25 calls trading about 750. So that's up 50% right now, but I've got larger goals on Intel. But let's be happy with the performance here today. Took some nice profits in Pfizer, and it's interesting that the news was we're not necessarily concerned about what drives the markets, but we had our cost, our risk reward, our probability, all within our parameters. And it turns out that today, when Pfizer and their Allergan merger was scuttled, $150 billion, $160 billion deal, that the Pfizer market reacted positively. So for us, it's not important the why the market does what it does, but it's how the market moves. And we are definitely on the right side of it. Put some money in the bank, and we're ready to go for tomorrow. That's it.